Yeah, I mean, something will break, and when it breaks, the printer will get turned on full speed, and the Fed balance sheet's going to go from the 7 that it's at now to, 20, and inflation is going to, be raging once again.
In Hong Kong, spot Bitcoin exchange traded funds ETFs now have assets under management of over $2 billion, or roughly $256 million. Although this is a tremendous accomplishment, its competitors have drawn far more capital and investors. The ETF market has seen a net influx of 247 Bitcoin in the last week. Renowned Bitcoin enthusiast Lawrence Lepard recently offered his investment advice in response to these developments.
They had a problem last fall, it's almost a year ago now, where, the 10-year went up very quickly, went up over 5%, and they came out with 10 or 15 releases that said, oh, the rate hiking cycle's over, and that brought the rate right back down into the threes, so yeah, they can jawbone it a lot. There's no doubt about that, and it's part of the problem. I mean,
Larry stated in an interview that while younger investors may feel more comfortable with Bitcoin, senior investors may need to exercise greater caution due to its volatility. He also called for an end to government recklessness and stated that he believed Bitcoin would perform better than gold in terms of long-term development and investment possibilities. Lawrence Lepard claims that when it comes to Bitcoin investing, age has a significant impact on risk tolerance. According to him, senior investors may need to exercise greater caution because they can withstand market declines and have a shorter runway. He emphasized that senior investors should use Bitcoin to diversify their holdings, but they need exercise caution. For additional information regarding Lawrence Lepard's talk, check snippets of the interview. To see more videos like this, please subscribe to the channel, like this one, and enable post alerts.
you just shouldn't have 12 academics, setting the price of money. I mean, money should be set by the free market, it's supply and demand. I mean, demand for investment opportunities and the supply of savings capital, and those two should balance at some price. But, we're so far away from that, and everyone is so dyed-in-the-wool Keynesian that, you mention something like that and people think you're a conspiracy case or a conspiracy nut or something. I mean, it's just, and yet, I think even the elites have to look around the world today and look at the facts and say, this isn't good. I mean, there are a lot more of us than there are of them. My suspicion is that, I mean, they're going to have to they're going to have to change, or else they're going to have problems is kind of what I see. So, yeah, it's a messy situation for sure. That's exactly right. And that's how I see it too. I mean, look, they try to behave responsibly until something breaks, and then something breaks and they have to come in, Mario Draghi style and say we're going to do whatever it takes. I mean, they sent out $16 trillion in swaps at the GFC, and I don't know what they did in COVID, but it was a big number as well. And yeah, I mean, something will break, and when it breaks, the printer will get turned on full speed, and the Fed balance sheet's going to go from the 7 that it's at now to, 20, and inflation is going to, be raging once again. So they've got themselves painted into a very tight corner. But they've got a lot of tools at their disposal. They've got the exchange stabilization fund. They can buy the markets. They can manipulate gold and silver, and they do. Maybe someday they'll be able to manipulate Bitcoin. I don't know. I don't think they are, but it's possible that in the future they could learn how to. Yeah, it's a real problem. I mean, we're fighting a very big, powerful beast, which is really kind of at its core the U.S. military. I mean, they're the most powerful military in the world, and people have to respect the U.S. government as a result of it. But it's all fading, James. It's all, they're really big cracks in their armor, really big, and it's not going to take much, once we get them on the run, to tip them over, and then it's game over for these big nation states. I mean, when the Soviet Union collapsed, it happened quickly. I'm not suggesting the U.S. is going to collapse quickly, and I'm not sure. I mean, I like Brent a lot, and I like his theory, but I'm not sure the dollar is the last fiat to collapse. I think there's a chance that it's right in there with everybody else at the same place, same time. Because if you actually look at it from a trade flows and a balance sheet perspective, there's almost no country in the world that's in worse shape than we are. I mean, we're pretty. I mean, if we weren't called the United States of America, if you looked at our balance sheet, income statement, fiscal behavior, et cetera, you would say this place is a banana republic.
Because gold has been around for 5,000 years and is well known worldwide due to its relative stability, Lawrence Lepard claims that it has a strong network effect, and is an excellent way to save money. While elder Turkish citizens purchase gold, younger Turkish citizens purchase Bitcoin. Lepard accused governments and central banks of being irresponsible and causing a sovereign debt bubble that would inevitably bust. At some point, if not immediately, he said hyper-Bitcoinization would occur. In addition, he forecasted substantial inflation and money printing, as well as a resolution within the next 10 years. Lepard believes Bitcoin will move significantly over the next 3 to 6 months, and that it is a better investment than gold, despite its heightened volatility. He is in favor of a sound money standard and the legalization of gold, silver, and Bitcoin.
Yeah, that's exactly right. That's exactly right. And it's gotten harder because, interest rates are higher and the credit card rates are higher. I mean, you're starting to see the impact on the economy too. You're starting to see delinquencies rising. We just started to see air travel in the U.S. is starting to go down. I mean, to me, there are a lot of indications that the economy is slowly but surely starting to roll over as a result of the money, tightening that they did in 2022. I mean, the wags were saying, well, it gives them cover to cut, and it probably does. I mean, maybe they'll do a 50 basis point cut. Look, I mean, relying on the economic numbers put out by the government is just a fool's errand because they're all made up, they're all distorted, and they claim inflation is 3%. I just had insurance on a house that I own, go up 100% year over year, right?
Yeah, wow.
Yeah, and so that's not 3%. I mean, anyone who lives in this world knows that inflation is not 3%. It's arguably not even 6%. But, if I can find somebody who let me book a dinner for a 6% fee, I'm okay with that. It's very hard. I mean, you kind of put your finger up in the air. There is manipulation. There has been manipulation. There always will be manipulation. But I say that in the sense that they can't entirely manipulate it because ultimately the market does, come into play. I mean, they manipulate it at key points in time. They try and hold it down. The supply right now is extremely tight for both metals. The silver is actually running a deficit. Most of the gold is going into the foreign central banks. The U.S. ADRs or U.S. ETFs for gold have not really been growing that much. In fact, they were until recently shrinking. So, I think it's a matter. I mean, I still don't think I think we're going to have an enormous bull market in sound money assets. Okay, and by that I mean silver, gold, and Bitcoin. I think there's going to be an enormous bull market. I think we're kind of on the cusp of it right now. I mean, gold is kind of breaking out, and Bitcoin's kind of hanging in there. Had a nice bounce off the low, early at the beginning of the year. My view is that it's coming for all of these assets, and it's just a matter of awareness that the government can never stop printing, and that these are the best performing assets out there. And until very recently, I think one of the things I know when I talk to potential investors and investors in my fund who have other investments, they're like, well, yeah, okay, so if your fund's flat, that's okay because I'm making so much money in my stocks. I mean, I think the stock, if you pull up the charts, the stock market valuations are really, really high right now. And so, I wouldn't personally want to own common stocks. I'm not at these kinds of valuations because, you got the chance for those valuations to turn down and I think they will. So, stock market to me is a potential landmine. But they continue to goose it and it keeps growing up. So I haven't really been shorted either. I just know that it doesn't really represent fair value. I think the biggest no-brainer investments today are in the asymmetric things that the government can't print, and the three that fit that bill are gold, silver, and Bitcoin. So. I think you start there. Certainly some stocks make sense. Commodity stocks will do well. I invest in the gold mining stocks, and the history there is that if gold goes up 10%, the gold mining stocks will go up 30%. Now, they haven't been doing that recently, and so they're still quite undervalued in my view. And at some point, there's going to be a catch up. But I think you have to develop a macro theme, and then you invest around it. And I'm very highly confident in the macro monetary debasement theme. I mean, I think they're in a doom loop. They can't get out of it. We've gone past, the start point by far enough that, if anybody wants out, they're gonna, it's not gonna work. So my view is that, stick to the stuff you understand, and you'll be okay. there's even an argument for holding some cash because if like we're skating between two extremes, right? One is high inflation, the other is deflation. And let's say, and we know that if we get a big deflationary impulse, we know they're going to print. But one of the things I think people have to kind of play through their minds, what if they print and it's not enough, and the
Hmm.
deflation just keeps on going? Do you know what I mean?
Absolutely.
Kind of a 1929 scenario where we really do kind of go into something like the Great Depression. And of course, the Fed will respond by printing a lot of money and probably ruin the currency. But you could have the worst of all worlds. You could have an inflationary depression where all activity is falling and stocks are falling and
Despite Bitcoin's price crashes and market upheavals, a crypto specialist has advised investors to stay invested and forecasted a huge breakout. Like Lepard, the analyst is hopeful about Bitcoin's future and recommends investors to focus on its long-term prospects while preparing for market turmoil. CryptoCon, an expert on X, formerly Twitter, gave his Bitcoin forecast on August 20th using a detailed price chart. He was sure the Bitcoin market's most exciting moment was coming. Lepard advises investors to take a long-term view to capitalize on Bitcoin's asymmetric growth potential rather than sell too soon due to market swings. According to CryptoCon, selling Bitcoin now is like fleeing the market before it rises again. This is corroborated by his PE multiple cycle analysis. This indicator, which compares daily transaction values to annual averages, has previously suggested Bitcoin price cycles support and resistance levels. According to the cycle, Bitcoin is at a low point and about to rise. CryptoCon displays a price chart of Bitcoin's swings from 2010 to 2026 to demonstrate how important it is to detect trends and stay with your investment, following Lepard's advice to weather turbulence to potentially reap substantial returns.